Real Estate Investment Trust, or REIT. Not only it is the most affordable way to invest in real estate right now, but it is also the safest. In this video, I'll explain why.
Okay, I'm listening.
Hey my fellow investors, welcome back to the channel, Adrian here. So the reason why I titled this video, Why the Best Real Estate Investment is Not Physical, is because when you buy a REIT, you're not necessarily buying the property directly, but you're buying shares of a company who will eventually buy, manage, and operate real estate. The entity that is used to buy real estate is the reason why it is awesome to invest in this current environment. Now, let's quickly go over what is a REIT, what qualifies as a REIT, and what are the pros and cons of a REIT. So back in the 1960s, President Dwight Eisenhower signed a legislation that will allow smaller investors to invest in income-producing real estate. REITs are companies that own or finance income-producing real estate across multiple sectors. Now, REITs are similar to a lot of private equity firms, but there are unique qualifications that a REIT must follow according to the SEC. Some examples are, a REIT must distribute 90% of its taxable income to shareholders in the form of dividends. Another is that the REIT must have at least 75% of its total assets in real estate. Another is that the REIT must derive 75% of its gross income from rent and interest on mortgages, just to name a few. Alright, let's talk about the pros and cons. Let's start with the pros. One of the main reasons why investors like to invest in REITs is because of its high dividends. Recall that a REIT is required by law to distribute 90% of its income as a dividend. That can make their dividend yield quite attractive. The second pro is that it is very liquid. Let's say you bought a share of Realty Income today. You can sell that share tomorrow if you want to because it is a publicly traded company in the New York Stock Exchange. Now, if you bought a house, it may take weeks or even months for you to sell that house. It's even worse if you invested in a syndication as a limited partner because you're in it for years. Pro number 3 is that REIT by default is diversified. There are certain REITs that specializes in one sector, like malls or cell towers. Then there are some that buys real estate in different sectors all over the United States, like this one. If investing in an index fund is how you diversify in stocks, investing in different asset classes in different markets is how you diversify in real estate. Lastly, pro number 4 is that you don't manage any property. I mentioned earlier that when I invest in a REIT, the REIT will use that capital to manage and operate real estate. But the responsibility to operate the property stops at the real estate trust company. The responsibility of the shareholder is to look into the financials and see how the REIT is performing to make an informed decision, if it is still a good investment. Now, what about the cons? Con number 1 is definitely going to have to be the taxes. Because what tax benefits do REITs provide?
Absolutely nothing.
Dividends from REITs are taxed as ordinary income, and depending how much you're making, this can be substantial. That is why if you plan on investing in a REIT, you should do it through a tax advantage account like a 401k, Roth IRA, or an HSA. Con number 2, and this is definitely a big one, it is liquidity. Yes, I know that I mentioned this as a pro, but it is also one of its biggest weaknesses. When something is highly liquid, its value can fluctuate not in a matter of years, months, or days, but in minutes. So when breaking news like the Fed's doing something drastic, presidential election, or anything under the sun for that matter, REITs are at the mercy of what happens in Wall Street, even though the properties itself is not affected by the news. And the last con are fees. The problem I have with REITs are they're not as transparent with their fees. Unlike a private real estate offering or like a syndication, all the fees are disclosed. Because if you think about it, these REITs must be paying themselves somehow to keep their lights on. So with all those cons, why are REITs the best kind of investment? See, we have an interesting next couple of years. We've already seen a couple of large institutions defaulting on their loans, a large wave of debt that are coming due, and we may be in this high interest rate environment for a while. When times are uncertain, you must protect your downside risk instead of looking for higher returns. Now, you don't have to take my word for it. Let's hear it from one of the greatest investors of our time.
Whatever success that I've had in life or that Bridgewater's had has to do with knowing how to deal with our not knowing more than anything we know. Because what you don't know is a lot. And you can reduce your risk by a lot more than you could reduce your return.
So how do you protect your downside in real estate? The main thing to consider is the debt. And REITs right now have the trifecta when it comes to good leverage, which is fixed rate, long-term, and low leverage. According to NAREIT, the average REIT is leveraged at only 40%, and most of their debt won't come due for another 7 years or 83 months. And if you look at this chart, REITs have a fixed rate financing at 3.6%.
But Adrian, why are stock prices plummeting then?
Well, wouldn't that make it a great bargain? To be clear, I'm not recommending anyone to buy a particular stock, but I think buying at a discount is always a good thing, especially if you're investing for long term. And if we're being honest, it's the only way most of us can invest in real estate right now. But please, whatever happens, still do your own due diligence if you plan investing in individual REITs. Most importantly, I can't emphasize enough to consider the tax implications when investing in a REIT. The tax drag when investing outside of a tax advantage account will make you want to run away from a REIT. And when you have maxed out those accounts and want more passive income, watch this video next where I walk you through how you can acquire more cash flow for your retirement.